Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. And if you appreciate getting straight insights from corporate documents, make sure you're subscribed and join our Discord community linked in the description below. This latest funding from Franklin is a big one. It's a semi-annual shareholder report and it's packed with details on their performance over the first half of 2025. But what we really need to focus on are the financial tables, because that's where the real story lies. Let's dive in. This is a massive report covering several Franklin funds like the Conservative Allocation Fund, the Global Allocation Fund, and a bunch of LifeSmart retirement target funds. It's a lot of data, but we'll pull out the most important bits. Let's start with the Franklin Conservative Allocation Fund, specifically Class A. Shares, their total net assets are around $853 million. That's a huge amount of money managed by this particular fund. Now let's talk about costs for a hypothetical $10,000 investment in Class A. Shares, the costs were really low, only $31. That's about 0.61% of the investment. This is quite good and suggests efficient management. Interestingly, the portfolio turnover rate for the Conservative Allocation Fund is only 9.76%. This means they're not trading assets very frequently, which often indicates a more stable buy and hold strategy rather than active trading. Moving on to the Moderate Allocation Fund Class A shares, we see total net assets of approximately $1.67 billion, a substantial increase from the Conservative Allocation Fund. The costs here are also very reasonable at $31 for a $10,000 investment, representing 0.60%. This suggests that even with a larger fund, the cost efficiency is maintained. The portfolio turnover rate here is a bit higher at 11.32%, and while still not extremely high, it indicates a slightly more proactive approach to managing the portfolio compared to the Conservative Allocation Fund. Next up is the Growth Allocation Fund Class A, shares with total net assets of over $1.42 billion, showing significant investor confidence. The costs are slightly higher here at $32, representing 0.62%, but still very competitive for a growth-oriented fund. The turnover rate for the Growth Allocation Fund is a bit higher at 13.24%, which is expected for a growth fund as it likely involves more active trading to capture market opportunities. Now let's look at the Portfolio Allocation Fund Class A shares with total net assets around $1.01 billion. This fund seems to have a simpler strategy with only 5 portfolio holdings indicated. This fund boasts incredibly low costs at just $20 or 0.38% for a $10,000 investment. This is remarkably efficient and suggests a very focused investment approach, and the portfolio turnover rate is 0%. That's a huge indicator of a passive or index style investment strategy where assets are held for very long periods or not traded at all, making it extremely cost effective. The Global Allocation Fund Class A shares are the largest we've seen so far, with total net assets exceeding $2.76 billion. This indicates a strong global strategy that's attracting a lot of investor capital. The costs here are $47 or 0.92%, which, while higher than some others, is still reasonable given the global diversification and investment complexity. The turnover rate is 17.06%, which is moderate and aligns with the aim of broad global diversification and likely involves some active management. Switching gears to the LifeSmart Retirement Income Fund Class A, shares we see total net assets of about $45.5 million. This fund is considerably smaller than the allocation funds. The costs are exceptionally low at just $15 or 0.30%, which is impressive for a retirement income strategy, perhaps reflecting significant fee waivers. This is surprisingly low and really attractive for investors, and the portfolio turnover rate is extremely low at 3.38%. This suggests a very stable long-term income focus with minimal trading, which is great for keeping costs down and potentially reducing taxable events for investors. Now let's look at the LifeSmart 2025 Retirement Target Fund Class A, shares with total net assets around $109 million. This is a target date fund, so its strategy will likely evolve over time. The costs are quite reasonable at $25 or 0.49% for a $10,000 investment, which usually includes a mix of underlying funds, so this cost is quite competitive. The turnover rate here is 9.78%, which is on the lower side, and suggests a strategy that isn't actively trading frequently, likely aligning with a long-term target date approach. The LifeSmart 2035 Retirement Target Fund Class A shares have total net assets of about $149 million. This fund is growing and aims to match investor needs as they approach a specific retirement date. Costs are $27 or 0.52%, which is very competitive for a target date fund with its embedded costs from underlying investments. The turnover rate is 10.60%, which is also quite low and consistent with a long-term investment strategy where adjustments are made gradually over time. Next up is the LifeSmart 2045 Retirement Target Fund Class A shares with total net assets of over $111 million. Costs are $26 or 0.50%, which is again quite good, especially considering the broad diversification often found in these types of funds. The turnover rate is 11.29%, which is a bit higher than some of the other target date funds, but still suggests a managed approach rather than rapid trading. The LifeSmart 2050 Retirement Target Fund Class A shares have total net assets of about $61 million. This fund is targeting an even further retirement date. Costs here are $25 or 0.49%, which is excellent and competitive for a fund with a very long time horizon. The turnover rate is 11.91%, which is slightly higher, indicating perhaps some periodic rebalancing as the target date approaches, but still very manageable for long-term investors. Finally, we look at the LifeSmart 2060, a retirement target fund with total net assets around $10 million. This is the smallest fund we're looking at today. The costs are $25 or 0.49%, which is quite good given the fund size, and it's competitive within its category. The turnover rate is 12.0%, which is also very reasonable for a fund with such a long time horizon, suggesting a strategic approach to asset allocation. Looking at the financial highlights for the conservative allocation fund, specifically for Class A shares, the net asset value has been steadily increasing over the years from $13.93 to $14.48, which is a positive trend. The total return for the 6 months ended June 30, 2025 was 5.89%, which is a solid performance for the period. In 2020, the total return was 930%, which is impressive and shows good performance even in that year. Now, for Class C shares, we see a similar pattern of growth in net asset value from $13.59 to $14.11 over the same periods. The total return for Class C for the 6 months was 5.5%, slightly lower than Class A, primarily due to higher expenses, which is typical for this class. The expenses after waivers and reimbursements for Class C are 1.36%, which is notably higher than Class A, reflecting the distribution fees associated with Class C shares. For Class R shares, the net asset value also shows consistent growth from $13.86 to $14.40. The 6-month total return was 5.73%, which is a decent performance aligning with other classes. Expenses for Class R are 0.86%, which is higher than Class A but lower than Class C, reflecting its typical use in retirement plans where distribution fees might be different. Class R6 shares show a net asset value growing from $13.91 to $14.45. The 6-month total return was 5.97%, indicating it's performing quite well. And the expenses for Class R6 are remarkably low at 0%, which is a significant advantage for investors as it means more of their money is working for them. Finally, the advisor class shares saw their net asset value grow from $13.93 to $14.47, a healthy increase. The 6-month total return was 5.94%, placing it slightly above Class R, but below R6, likely due to the lack of distribution fees associated with advisor shares. The expenses for the advisor class are 0.36%, which is very competitive and reflective of a structure often used by financial advisors that pass on lower costs to their clients. Now, looking at how the conservative allocation fund invests, we see that a massive 98.2% is in underlying funds and ETFs. This tells us it's a fund of funds with a highly diversified strategy. Domestic equity makes up 28.9%, with its top holdings being Franklin US Core Equity Fund and Putnam Large Cap Value Fund. Domestic fixed income is the largest category at 47.2%, with Franklin US Core Bond ETF and Franklin US Treasury Bond ETF being major holdings. Foreign equity accounts for 11.2%, here with holdings in ClearBridge International Growth Fund and Templeton Developing Markets Trust. Analysing the statement of assets and liabilities, the paid-in capital for Class A of the Conservative Allocation Fund is around $751 million, which shows a significant amount of investor capital. In terms of overall financial health, Franklin seems to be managing these funds effectively. The costs are generally competitive, especially the R6 and advisor classes, which offer great value. The investment strategy leans heavily on underlying funds and ETFs, which provides diversification, but its success hinges on the performance of those underlying investments. For the Conservative Allocation Fund Class A, there were net sales of $16,249 after commissions, which indicates steady but not explosive growth from new investors. The Board of Trustees reviewed and approved the continuance of each management agreement. This is a routine but important step that shows they are satisfied with the manager's performance and fees. Overall, Franklin appears to be running a solid operation with competitive pricing, making these funds a rational choice for many investors.